Hi everyone, and welcome, and thanks for joining us for our first 2022 Learn and Earn session here in New South Wales and ACT. I'm Paul Biddle, the New South Wales State President for the FBAA, and I'll be your MC for today. This is my first public duty as State President, and I'd like to thank the Board and the State Councillors for their support. This is the first Learn and Earn for 2022, and we'll run over today and tomorrow with beneficial content for you to take away. Please share your webcams if you're able to, as it helps us all to feel more connected, especially the presenters. If you do have any questions, please feel free to type them into the chat box. And if we have time, we'll definitely cover them off. Feel free also to reach out directly to the presenters for any particular questions or scenarios you might like to discuss. There is 1.5 CPD points allocated for each Learn and Earn session. You'll receive an email with a CPD code and a short survey. So stay tuned throughout the whole webinar to ensure your attendance is marked off. Please also take the time to fill out the survey, as it gives us the feedback we need to tailor our plans and our events for you. We'd like to thank our sponsors for their continued support. They're always available if you wish to contact them for further education and assistance. Please, a special note to our wellness sponsor, Suncorp. You'll get all their contact details in a follow-up email after today's session. FBAA members, don't forget that you'll receive 10% off your membership every time you refer a new member who joins the FBAA. Please also download the FBAA app, as it gives you easy access to information, updates, and upcoming webinars to register for. Don't forget also to log into the FBAA members area, which has members benefits, resources, and tools to assist you. We'd also like to congratulate and recognise our FBAA members in New South Wales and ACT listed on the following slides, who've been with us between 5 and 15 years, or in some cases, a little bit longer. Thank you for your continued service as a member of the FBAA. FBAA has recently started a community impact hub. This is a charity gifting portal that allows you to donate to charities of your choice and help support the community. The agenda for today's session was on the registration setup and is available as a handout in the Zoom chat box. So let's get cracking. First of all, today we have Josh from On Deck. And he'll be outlining why small business should use small to medium enterprise finance as an option. Okay, over to you, Josh.
Thank you. I should probably unmute myself first. Lovely to meet everyone. My name's Josh. I look after our New South Wales and ACT brokers. I'll certainly keep it really short because I think it's quite a simple answer and kind of a simple topic around, why should not only customers, but also brokers use SME finance. And, without kind of going over the dot points, there's really two main aspects to it. Number one, as a broker, there's certainly been a big conversation around, how do you diversify your business? And, I'll be the first one to say that this product is probably not a core product for a lot of brokers that we work with. Probably 90% or so, identify as kind of, residential brokers and mortgage brokers. But it's very much a value add. You certainly, if you look at your database within your business as to, the type of customers that you get, the first step that I always say is, obviously look at the ABN holders that you have within your business, because they're our target market. So, and again, SME finance really for the customer and for yourself is a value add. So, as an example, you're not going to talk to a customer and they're going to say, I need an unsecured loan or I need SME finance. I'd love for that to be the world that we live in, but it's just not the case. What they will say is they'll say, look, we're really having a challenge hiring staff at the moment. We found this new piece of equipment and we need to get it really quick, or, certain kind of, catchphrases like that you keep an eye out for. And look, as an example, in terms of what we do and kind of the scenarios that, we commonly see, I just picked a really recent example of a takeaway restaurant. And a big call out here is, 7 years in business and 750K turnover. By all means, these are all bank level clients that do actually approach, lenders like us to finance. But, what they're looking for is they're certainly looking for a quick turnaround time. And, by looking at SME finance scenarios for your business, you're able to add that value to your client and to your client base. But you're also able to give them a really simple solution. In this case, we're not asking for any asset security. We're not asking for all taps or GSAs over the business. So, within 24 hours, you're able to go from client kind of, giving you the background of, I need to expand my location or my business to, you've got funds in the account, which I think is really a fantastic reputation for yourself as a broker as well. And obviously clients are really happy with that. So, in terms of the SME lending landscape, I think everyone is pretty aware that, we're all here to help brokers grow in their business. Whether it's ourselves or any of obviously the other FBAA partners or lenders on your panel. We've certainly set up our business in a way that, whether you're dealing with SME finance for the first time, or if you're kind of a veteran in this space, we're all kind of an extension of your business. And I know that a lot of other lenders are very much the same. So, it's kind of that, in a way, that office or that back office behind you to support what you're doing. In terms of the products, I think it's an incredibly competitive landscape for lenders. And I think that's fantastic for brokers as well, because, we're always trying to up our game. We've recently launched the Lightning Loan product, which is effectively an automated product up to 150. And, I certainly don't think that ourselves as a lender would do that if competition wasn't fierce. So, I think we're certainly all there to kind of support what you do. So I know that's not 5 minutes, but I think, again, it's a really simple question as to why you should diversify and use SME finance for yourselves, but also for your clients as well. So, thank you. Thanks for your time.
So Josh, just while we've got you there, just to sort of sum up, how would a broker, because obviously I'm a broker as well, how would a broker go about, they've spotted, they know that there's a need, they've had a chat to the client and as being sort of, I guess, the first port of call for most clients. They've had someone come to them, I need 150 grand, I've got to buy this. What's the first step? What should they do to get in contact with you and get the ball rolling? And then also, what should they bring to the table?
Yeah, look, it's a really great question. I think like the conversations that I always have is kind of, what documents are available now for us. It's very much a simple 6 months of bank statements. I think you kind of always work down the lender chart, right? So for me, if I was a broker, I'd probably start at a major. It's just going to be the lowest cost if I can get security. But on the flip side, if those aren't available, if you want a nice, simple solution, then cool, 6 months of bank statements, give myself a call and we'll be able to contact the lending team with myself. We'll be able to get back to you normally within 15 to 20 minutes of, this looks like a 150K deal. And then it's a matter of communication. If brokers want to handle the client communication, they can do so. On the flip side, we also work with people who give name and a number and just way too busy with their mortgages. So either way, we can support either structure. So
a spot and refer type
exactly
is okay. And so do you think your biggest selling point is the speed at which things get done? Is that the biggest critical factor?
Yeah, absolutely. So speed and certainly security. So, a lot of customers, and 100, 150K in the grand scheme of things is probably a smaller term or smaller lend solution for a business. So most people don't want to put up their kind of their family home behind that. So, if we're able to do that in a way that's normally same day and we don't need any kind of asset security behind it, then, fantastic. It's very much two birds, one stone.
Perfect. Well, thanks so much for that. That's Josh from everyone. So if you need to, as I said, afterwards, we'll send out an email with all their contact details. You can contact them direct for any scenarios or anything like that you've got to discuss. So next, we're going to move on with Sharon from Heartland. And she'll run over reverse mortgages and seniors lending. So over to you, Sharon. We just need you to unmute, Sharon. Sorry.
Sorry about that. I'm just getting the sharing going there. Can you hear me now, Paul?
That's all good. Go ahead.
Excellent. Great. Thanks for that. And lovely to be invited by FBAA today to go through with you all a bit about reverse mortgages. So what we're finding when we're out at PD days, when we're talking to brokers in the market, is that a lot of them still don't understand really what a reverse mortgage is or how it works. So this presentation today is really all just about that, what a reverse mortgage is, what kind of product features there are, typical customer, and how we can help you, brokers, to diversify your business and write reverse mortgages. So in terms of what is a reverse mortgage, to start off with, we know that just like small business lending, it's not on everybody's top list of lending. A reverse mortgage is very similar to a normal home loan, except it's designed for the needs of seniors. No regular loan repayments are required until the end of the loan, but they can be made at any time. Importantly, the seniors, the customers who are 60 and over, can continue to own their own home and live in it for as long as they choose. Interest is added to the loan monthly, it does compound, and the total loan is only repaid when the last resident vacates their home. So when they pass away, sell the property, downsize, or move to aged care. In terms of the product features of a reverse mortgage, all of this is provider dependent. So I'm not just talking about Heartland today, I am just talking about generally in the market, the kind of products that are available. So they can be fairly flexible, usually available from people who are aged 60 years or over. You can access a lump sum and initial advance at the beginning, regular advances for up to 10 years as an income stream, or a cash reserve or a line of credit usually. Repayments can be made at any time. Some providers offer redraw, and some providers offer equity protection, which means that the net sale proceeds of the property at the end of the term, a portion of that is protected. Some providers also offer a loan for aged care, which is a fixed 5-year term for people who have left their home and moved into aged care but need some funding for aged care or other costs. And there is also potential to offer the loan to secondary properties, so investment properties or holiday homes. LVR is dependent on provider as well, but you're generally looking for people aged 60 or over to lend 20% or 15% potentially as well. Going up to age 90 at 50% is normally what the providers are offering. It goes up 1% every year based on age. If you're looking at an investment property or holiday home, that can be scaled as well. So it really does depend on the provider and what you're looking to offer to your client. In terms of the back end of reverse mortgage, the fulfillment process and the client safeguards and how it works, it is regulated under NCCP, but it is slightly different to a forward mortgage. Instead of looking at income and expenditure and being able to afford loan repayments, it's discussions around future needs, including aged care, equity available in the future for medical expenses, leaving money to beneficiaries, all of those good things. There is a mandated projection on the ASIC Money Smart calculator that has to be given to every single customer when you're having this conversation with them regarding the loan structure and the potential needs in the future. And independent legal advice is always required on the loan agreement after approval. We tend to recommend, well, we always recommend family discussion with Centrelink. Normally the loan doesn't impact the pension, but it absolutely can if the funds are being used for an asset or for investment. So it's really important that the customer has that conversation with Centrelink themselves. We also encourage independent financial advice, but it isn't usually required. It is dependent on purpose there. In terms of customer benefits, reverse mortgage helps people free up funds to live a more comfortable retirement, remove stress from everyday bills. Look, our top 5 uses for a reverse mortgage is home improvements, debt consolidation, car repair or replacement, income, and travel. Our typical customer is usually retired. 75 years old is the average age. They've used up their super and other assets and are on the age pension. Normally it's the east coast of the country, but we can lend anywhere with a reasonable property market. Average property value, 960,000, though of course we know that that is changing all the time at the moment. And look, they usually only borrow about 12% of their LVR upfront. The difference is usually set aside to draw down in the future. That flexibility means that compounding interest is only charged on what they draw down. We've got a little case study here, and hopefully I have enough time to go through it. So this is the kind of customer you'd be looking at as a broker potentially coming to you. So you've got Jack and Bev. Bev is the youngest at age 70. Home value worth $800,000. The maximum lend is $240,000. They've taken $100,000 up front and set $140,000 aside in future, with a couple of drawdowns being taken at year 2 and year 4. Now, I think the really important thing is when having these conversations with customers is that the compounding interest, the loan does grow, and even at a very conservative 3% property growth rate annually, the equity remaining in this projection means that the customer has more equity remaining than what they did at the beginning, and their property value is not very different at all. It's only slightly less than what they took out at the beginning. So it's really important conversation to have and projection to go through with the customers so they understand how the reverse mortgage works over time. I'm assuming we're running out of time, but I could go on about.
Well, Sharon, you got plenty of time, Sharon.
Oh, sorry, the first presentation was so quick.
You're ahead. That's all good. Thanks, Josh.
Okay, great. Thank you, Paul. So look, I will talk a little bit about this one then, because I know that some brokers would be very interested in, is there a market for this kind of product? What are you looking at in the market currently? So look, 93% of Australian homeowners, older homeowners, want to remain in home ownership. We know there's an ageing population. 20,000 people turn 60 every month in Australia. 90% of older Australians want to age in place. 36% though live in a house that's unsuitable for aging without upgrades or renovations, and 29% of those won't be able to afford those changes. So a reverse mortgage is a really great solution. It can help your customers happily live in their homes where they are healthier, have better peace of mind, have more security, and also cover the needs that they have now or in the future without having to sell their home. In terms of why to offer reverse mortgages, as well as the great market that there is out there, it really gives brokers an opportunity to broaden and diversify their business. You may have customers with parents or customers as they get older that this product could be offered to. Grow revenue. Loans grow with a reverse mortgage rather than reduce. So it is a different kind of product and a different kind of payment structure, I suppose. They tend to be long-term sticky customers. There isn't a lot of churn with a reverse mortgage. Again, as I mentioned before, with children and their parents, it helps you to expand your referral face and offer a full service offering to your customers. It is a growing market. People are retiring with more debt. They're retiring with not necessarily all the funds they need to live a retirement comfortably. And when they've taken all of their super, this is a great option if they don't want to sell their property. The application process is very straightforward. Our application includes a broker disclosure, which goes through what brokers should be discussing with the customers. So it is very straightforward to offer a reverse mortgage, and it's something we can assist you with. Minimal ongoing maintenance on these loans, and you can leverage referral networks for this kind of product as well. So look, I've been really focused on not talking about Heartland, but about talking about the product and the market, but more than happy to answer any questions now or offline. Contact details about our team is there. Look, we've helped more than 23,000 customers release more than $1.6 billion of equity from their home to live a more comfortable retirement. We started in 2004. We're the longest reverse mortgage provider in the market, and more than happy to help anyone if they have any questions or wish to discuss anything there, Paul. So yeah, appreciate your time and FBAAs today.
Sure, stay there for a second, Sharon. I've got a couple of questions, but guys, if anyone's got any questions, please type them now into the chat box and we'll ask Sharon. But just a couple of questions from me, Sharon. Obviously, as a broker, sometimes new things can sometimes scare us a little bit in terms of doing things for the first time. So if someone wanted or had a potential client that was wanting to do a reverse mortgage, what's the best way for them to start? Is there a spot and refer with Heartland? And then also, can they get accredited direct? Because I know a lot of the different brokers are with different aggregators as well.
Yeah, of course. So Heartland signed up with almost all of the major aggregators. We have a spot and refer, a referral model. There's a couple page agreement to sign just to confirm all the details of that, but we can do a spot and refer. Or we can do full accreditation, which includes the training and materials needed. And once the accreditation training and test is done, you can offer it to the customers directly as well. So we offer both offerings.
Perfect. We haven't had too much come through. Just to the FBAA guys, is there anything that's come through direct, or are we good to move on? Looks like you're off the hook, Sharon. I don't think anything's come through. It was an excellent presentation. Obviously, it answered everyone's questions, it was good. Oh, we just had one come through. What sort of commissions could we be expecting from?
Yeah, of course. So yeah, it does depend on the aggregator, but our standard commission offering is 0.88 upfront and 0.22 trail, both including GST. And then drawdowns after that are either paid 0.88 at the time, or the full facility is partially paid at the beginning and partially paid on drawdown. It just depends on which aggregator as to what commission structure we offer. So if someone's interested, reach out and we can confirm that.
Perfect. Cool. Thank you very much.
Right. Thank you.
So next on our agenda is Renee from Prosper. So she'll be educating you around tax benefits of financing small businesses. So Renee, over to you.
Thank you so much, Paul. I'll share my screen and we'll jump straight into it.
Perfect, and we can hear you good and the sharing's away. Perfect, thanks.
Working? Fantastic. Hi, nice to meet you all. Let me just start this from the start. Here we go. Hi everybody, I'm Renee Tocco. I'm the Northern Regional Manager for Prosper, and I'm really excited to have this time to quickly talk you guys through some, I guess, tax tips or ways that businesses can utilize this period. So we just went through the end of the financial year period, which is an absolute peak period for us, but don't discount July, because there's a lot of businesses that are a bit slow to get on top of finalising FY22, and so there's still plenty of opportunity in the market. How to make the most out of accessing credit for small businesses. What we're seeing in the market at the moment is actually that business owners are really optimistic. They're substantially more robust. They're normal. They've navigated 2 years through the pandemic, and a lot of the reasons for accessing cash at the moment is all around growth and pursuing more opportunities, diversifying. They obviously do utilize it to pay out invoices, to pay out debts. A lot of businesses do utilize Prosper loans for the purpose of even paying out ATO debt. So do keep in mind that our loans can be utilized for any worthwhile business purpose. We are seeing a lot of equipment finance brokers leveraging our business loans for the purpose of actually paying deposits or soft costs associated with any equipment purchases. and or to facilitate purchasing equipment, especially for the older aged assets or more tricky assets, or just for the businesses that want to leverage the instant asset write-off, which is still an incentive available at the moment. Our line of credit is actually one of the most easiest products to talk to any small business about, because it's basically a true revolving line of credit where they can draw down from the facility whenever they need it. It's a fixed amount and they basically only pay interest when they draw down. If you're looking for a conversation starter, this will be one, because our data indicates that 79% of businesses actually would really love to have a line of credit, but only about 9% of businesses with staff under 10 staff have one. So super easy one to talk to. I'm just moving my screen so I can see the last bit there, credit cards. Oh, this one is very dear to my heart, because our data indicates that at the moment, 39% of SMEs are actually leveraging personal cash reserves or credit cards when they encounter cash flow hurdles in their business. As their trusted advisor, I think it's really important that we educate the market, because I think a lot of them don't realise that there are alternative options available when they need working capital fast. And as we all know, it's really important to use the right cash for the right problem, and credit cards and personal cash reserves, or even drawing equity out of the family home, should really be a last resort. A little bit of tips for tax time. Look, obviously businesses need to claim all of their business related expenses. I think typically businesses know that part, but it's always a nice reminder. Being really compliant with record keeping is essential. You know, it's really good as business advisors to sometimes just touch base with our customers about some of the really basic things like CRM and record keeping, because it just leverages the relationship that you already have to show them that you truly care and you're invested in their business. Interest paid on business finance is obviously tax deductible, and so is any costs associated with setting up that business loan or finance facility. Encourage your clients to plan ahead for tax time. But as I mentioned, June was massive. It's always massive. But there's a lot of overflow into July, because a lot of small business owners are so busy running their businesses that they don't probably plan ahead as much as they should be. And lastly, maximize all tax deductions by speaking to, you know, your accountant or your business advisor. But of course, while the instant asset write-off is still available to businesses, that's a really big one to talk to when they're purchasing any type of assets for their business. And of course, please reach out to Prosper if you've never used us before. Join one of our induction webinars so you can get a feel for our products and services. We are a true spot and refer lender, so you're able to just identify opportunity, whether it be a line of credit or a customer that needs working capital, and physically just send that through to us. We'll call on your behalf and we'll actually keep you in the loop every step of the way. The whole application's done over the phone, DocuSign, and funds can be released in as little as 4 hours. So I'll close by just saying we have loans from 5,000 up to 500,000, and our line of credit ranges from 2,000 and up to 150,000. But please reach out to me if you want to hear more, talk more, or find out how to diversify into this very, very exciting space of finance.
Just stay there for Renee. I've got a couple of questions myself. This is actually really good, because I don't have to, no one has to hand me a mic, or just ask all the questions I want to ask straight away. So obviously, as a broker, we know the clients that are self-employed. We know a lot about them. Mm-hmm. Do you guys have any direct marketing stuff or collateral that you're able to provide and maybe brand, co-brand with the brokers that they can send out and easily give to their database?
I didn't pay Paul for that question, just so that you guys know. The white label marketing assets available to all of our partners is actually in the partner portal. If you don't know how to access it, reach out. Now, our white label marketing content is super unique because it's all being written to talk to, values or conversations or topics that will drive a customer requiring one of our loans, but it actually does not talk to Prosper. So they've been created in a way where you can physically upload all of your own contact details straight into it. You upload your logo and it's ready to go. Everything from LinkedIn, social media, Twitter, brochures, newsletters, emails, we've got absolutely everything in there. We also do have a premium marketing solution available for people who do have large SME databases. It's really effective. That's something we need to set up for you. But again, everything we create is designed to only talk to your brand and to the value that our products can potentially offer a small business owner.
Sure. And Renee, just what can, once we do a spot and refer, what can then the direct client then that's dealing with you expect? Like, how long is it going to take on the phone to do a typical application, and what's the process from your side?
Okay, great. Look, the process is super simple. We actually just need the director's name, business name, email, and mobile number. You can send it straight through to your BDM. If you don't know who that is, reach out to me and I'll send you an intro. From there, our agent will contact your customer within about 15 minutes. If you want to line up a specific time for our account manager to call your customer, you're welcome to stipulate, hey, expecting a call at 2 p.m. You can let your customer know that they'll be receiving a call from one of your credit advisors just to run through indicative rates and so forth over the phone before we proceed from there. So the phone call will be made within 15 minutes or at the specified time. They actually run through a really quick assessment over the telephone and they give the customer a bit of a repayment indication, the maximum lend that we could potentially do for them, and they just make sure that it fits in with the customer before they actually proceed to the application. If it ticks all the boxes and the customer's happy to go ahead, they do the app over the phone. The whole thing takes about 10 minutes. They then send them out a link through an SMS or an email. All we actually need to assess loans up to 250,000 is bank statement. So we collect that straight away. It goes into our credit decision engine and it actually spits out the loan offer within 11 seconds. But we say 4 hours because sometimes we can't get a hold of the customer and, there might be a little bit of back and forth. But through the whole process, your BDM would have by then actually introduced you by email to the account manager that's working with your customer, said, hey, Max is working on this deal for you. Max, please keep broker XYZ in the loop every step of the way. And that way you're across exactly what's happening and you can actually be part of the process and contact the customer to congratulate them on the settlement or whatever your normal process is.
Perfect. Because as like the last presenter as well, sometimes the first time is always the worst for any sort of broker using a product for the first time. But basically what you're describing, it's pretty simple, pretty easy. Don't necessarily need to know any specifics, and we can workshop and go through. And it's pretty quick for the business owner as well, because obviously they're going to probably be time poor as well.
Absolutely. And Paul, on that note, I'll just say, look, I know that a lot of business, non-commercial brokers are hesitant to diversify into commercial lending because, unlike the resi space, you may feel that you need to understand every credit matrix, all of that. Starting with Prosper is the perfect place to start because we do all the legwork for you. You don't need to be an expert, but we can arm you with enough information that you can sound like an expert from your end. And by keeping you in the loop every step of the way, you can learn through the process and become, more commercial savvy and potentially diversify into, wider ranges of commercial lending products in the future too.
Perfect. Thank you very much, Renee. Thanks for that.
Thank you.
So next we're going to move on to Selena from Early Pay. She'll be presenting on how does asset finance help Australian small to medium enterprises. So over to you, Selena.
Hello, can you hear me?
Perfect, we can hear you perfectly.
Awesome. All right, so I will touch base on our asset finance product and how asset finance can help small business. So as the presenters before me in the SME space mentioned, it is something that can be scary for mortgage brokers to move into, but that's what all of us BDMs are here to help with. So don't ever hesitate to reach out. We can do the hard work for you. And along the way, if it's something you want to learn more on, we're happy to give coaching and help you diversify that income stream. So now I've got to get it to change screens. There we go. Okay, so there are a lot of asset finance lenders in the market. You've got all your mainstream and then you've got your alternate lenders. I'm going to go through a couple of points on how early pay helps and then give you some actual examples. So where we offer a really good product where we do cash and sale back, so 100% against existing assets. And that can help increase cash flow. So I've had some brokers come to me with some clients needing some cash flow finance. They didn't want to do unsecured lending. They had some assets that were reasonably old, under like 1998, and they wanted to lend against those and increase the cash flow in their business. And we've been able to do that in the past, every day. It's an alternate way to increase that cash without having to do unsecured lending. We are also really okay with ATO debt. So we lend every day and help people with ATO debt. They can do cash and sale back to pay back that ATO debt, or they can use the asset finance to purchase new assets to help increase their income. We don't need any financials for transactions up to $500,000 if the director is property backed. And we are, as I mentioned, open to age assets. Some lenders will restrict maximum loan amounts. We will lend up to $1.5 million per entity if servicing's there. And some lenders won't take into consideration new income earned from assets being purchased for servicing, and that's something we can do as well. Let's have a look at some actual examples. So, sorry. So we've got a customer here, been trading for a while, since 2005, earthworks and water haulage services. So they needed a new truck, but the truck was more than 10 years old. So they've had a little bit of pushback from some of the lenders, especially the mainstream. And not to mention them then wanting extra assets, including properties owned by the directors and that sort of thing. So we funded the asset just as a normal purchase from a private seller with no issues. We actually ended up doing that one over 60 months on bank statements only. So the asset to us is definitely viable. The income was there, that we had no issues with that transaction. So this one is a little bit outside of the box. So these guys, they were a long-established property developer, and they owned 26 unencumbered assets associated with trailer camps. So what that actually means is they had 26 dongers out on a mine site that were used for the miners that flew in and out. Now they owned them and they were unencumbered, but they needed cash flow for to service a new contract, essentially, to pay wages, buy more equipment, but they didn't have the value wasn't in the asset they were purchasing. So what we did is we did a valuation on those containers, and we ended up giving them 1.4 million and only securing those 26 dongers, I suppose. We also refinanced, because they had some lending with other lenders all over the place, some unsecured lending, all of that sort of thing. We consolidated everything, lent the max to the value of those dongers, and we saved them $900,000 a year. And I actually asked my team to triple check that, because I was like, I'm not saying that, no one's going to believe me. But we genuinely saved them off their repayments and their costings per year, $900,000. So a little bit of common sense lending, which is always nice in a mortgage world. Okay, next one is an outside the square solution. So these guys also needed some cash flow because they had a significant drop in income due to a fire at a mine site. So, and they'd recently won a new opportunity and they needed the cash in order to secure that contract, because in a lot of cases with mining,
the contracts are quite big. So although you're going to earn a lot more, you're going to need to outlay a lot more to get that contract flowing. So we actually gave these guys $500,000 within 48 hours against what's already owed to them by other contracts. We then gave them $470,000 in asset finance to purchase the new trailers. So we ended up giving them $970,000, and I think that one was a pretty cool one. We talked about it because it only took 4 days to get the cash in their accounts. So the best part about fintechs and that sort of thing is your speed to market and that ability to be able to help with less information, but being able to use more common sense and give them the finance and the funds that they need quickly. Now, we also will help distressed businesses take advantage of opportunities for growth. So something we do on the invoice side is we work alongside a lot of insolvency companies. We're not just here to help businesses that are doing phenomenal. So these guys in particular, they did refrigerated transport services, so food transport. They experienced a decline in their business. They were approved for hardship by NAB, and they weren't in a position to resume payments at the end of that hardship period. So in April 2021, the business was picking up again and was able to clear some of its defaults. They needed a new prime mover to boost the business and was finding it really difficult to get asset finance because you can imagine NAB is definitely not going to help them at this point. So we took into consideration all the circumstances, the processes they took, and the honesty that they gave us. And we were able to show that the new asset was going to produce a certain amount of income, and we were able to give them the $382,000 with a 20% balloon on that one. So I think it's just good to know that we're here in that asset space for cash flow, as well as, you know, increasing income and being able to help businesses that might have struggled in the past that need someone to look at their transaction with a little bit of common sense. That's it, unless there's any questions.
I've got some questions.
Of course you do.
So often as a broker, we'll get the ATO portal and we'll have a look and we'll go, yes, undisclosed tax debt before, like, you only get burned once, I think, as a broker with that, with a self-employed person. So if, for example, we've got a self-employed person who is just the average type that's not looking for, you know, any commercial type products, that just wants to pay our ATO debt, but is asset backed by property, is that something that you guys would look at, that we can refinance, get it off as an ATO debt, refinance to you guys, and then we can go off and do our little refinance that we're looking at?
Well, the answer to that is yes and no. So we can't take property for security. We don't take it in any aspect of our business. But if they had other unencumbered assets, we absolutely could use those to lend against to pay out the tax debt. I'm doing one similar at the moment. This gentleman has $700,000 in tax debt. He needs to buy 6 new prime movers in the next 6 months, but no one will give him the asset finance. He can handle that tax debt, but he was struggling. So what we've done is we actually have given him $1 million invoice finance to inject some cash flow back in, and then we're going to lend the funds for the new prime movers without him having to pay out that tax debt in full, because it's not always the best decision for the business to pay out that tax debt. And if we can look at something and it makes sense to keep it in place, we say to them, keep it in place, use the cash flow to secure your contracts, buy your new trucks, and do exactly what you need to do in your business.
Perfect. And we just had another question. Can we get accredited direct with you off panel? I think that was the question that's been asked. And also, are you guys the owners of AutoPay?
Yes, you can get accredited direct off panel. We're a commercial SME lender. So we are on most panels though. So if we're not on your lender's panel, just let us know and we can ask that question for you. And then, sorry, what was the second question?
Are you guys the owners of AutoPay?
Oh, no, we're not.
Okay, that covers that off.
Yeah.
Perfect. Thank you very much, Selena. So we are bang on time. So this is definitely how I like to run things. So next we've got Surinder from Trailbook Loans, and he'll be presenting on how you can use your Trailbook to grow and manage your business and some data trends. So over to you, Surinder.
Thanks, Paul. There we go. All right, I'm assuming the screen is showing.
We are showing and we can hear you.
Okay, no worries. Good afternoon. Thank you for your time. Hope everybody is somewhat dry The news certainly isn't that great over the floods in New South Wales at the moment, so I hope everybody is safe. Hey, I did this presentation not that long ago, so whilst it's the same presentation, I'm probably going to talk a little bit differently around what we do and how we do things. So, hang on, why is that not going? There we go. So we own a business that lends to mortgage brokers, financial planners, and real estate agents. The last time that I did this presentation, it was about, hey, how do you increase the value of your mortgage broking trail business? What can you do? What are some strategies around actually building the business and the value of the business? I just got a report through yesterday. It would appear that the average trail book is selling for between 2.5 and 3.25 times now on independent data that's collated. So that's certainly a long way from the 1.8 to the 2.2 times that it was even 18 months ago. Again, the biggest value adds are those full businesses. Okay, they're not just, where you're selling the annuity stream, it's where you're actually selling the business. You've got a marketing plan and the rest. So keep doing that. How's the book valued? As I went through last time, you've got a couple of different valuation metrics. The minimum now for just the annuity stream income of selling it seems to be getting out to the mid 2 times. That was sort of the low 2 times earlier this year. And for the fully integrated businesses that are selling as a full business, then it's getting out to 3.25 times. One of the biggest things that we've got a lot of inquiry about at the moment is acquisitions, but also marketing costs. So a lot of broker businesses are looking at ramping up their marketing in the coming period on the back of, I guess, all of the negative news around the interest rate cycle and property prices and the like. We're absolutely happy to fund for marketing purposes, no issues whatsoever. But just as a side to that, because we do lend to financial planners and real estate agents as well, there are a lot of those businesses that were funded by banks, particularly in the rent roll space. And because they've gotten tax debt out of control or due to lending covenants, a lot of the banks are starting to look to move on a lot of their rent roll and financial planning business. So if you've got those referral partners or you know them, make sure you reach out to them, because we're more than happy to look to finance real estate agents and financial planners, as well as mortgage brokers. That's sort of it. I'm probably a minute early. So, small business brokers, if you've got ATO debt, if you're refinancing, expanding your team, buying a book, if you need cash for any purpose, just let me know. Thanks, Paul.
No dramas. I've got a couple of quick questions. So what can we expect as, say, a broker, if we bring the book to you? How long would it take for us to access funds potentially through your service?
Yep. So the quickest that we've funded is 2 weeks beginning to end. The biggest part where we get held up is getting all the information that we need up front, and then the aggregated consent at the back end. But average times at the moment are sort of 3 to 4 weeks, but we can turn around particularly quickly. I had my team turn around one in 4 days because of the end of financial year last week, which was impressive. So the quicker we get the information, the quicker we can turn it around.
Yep. And I'm guessing every person's circumstance and book would be slightly different. So just a direct conversation with you, just to see where everything's at and just to run it past you and then go from there. Yeah.
Absolutely. So one of the great things that we've got is I own the business and I do all the front end work to make sure that if I speak to a broker and I say, hey, yep, we can do it this way, then 99 times out of 100, it is done that way because I've got the authority to say it.
Perfect. Done. Thanks so much, Surinder, for that. Obviously a valuable product that we can leverage against. So next on the list today, we've got Alex, and he'll be talking about what's the best method and structure for consumer finance. So Alex, over to you.
Thank you, Paul. Let me just share that. Just one sec. Does that come through? Fantastic. So Alex Bodriaga, National Sales Manager at Notify. So today we are going to be covering off, let me just make sure that that all works. Can you see that right?
That's all good, and we can hear you perfect.
Fantastic. So look, today we're going to cover off how asset finance will not only increase revenue, but also help retain and attract more customers. We also need to deal with the issue of time, which we constantly hear is the biggest barrier for mortgage brokers. Much of these stats you might be fairly familiar with. So we already know the majority of home loans are facilitated by you guys. We know customers will look to purchase a new asset shortly after moving into their new home. And we could almost assume that most cars, bikes, boats these days are going to be financed. So look, whilst we typically have all the documentation and information on hand, the issue of time still becomes that contributing factor. You know, that could be lack of time to get across lender policies, which is quite challenged, product compliance, and then not to mention going up against another dealer or even an asset broker. You can quickly put into that too hard basket. You know, we might think that there's not enough money to suffice paying it any more attention at that point, or just plain a capacity issue where you know you don't have enough bandwidth or hours in a day to actually trade off to have a think about diversifying. So on that, we've ran some stats. So when we actually break down the hours spent on an individual mortgage application divided by the actual settlement commission, this includes everything from taking an application, preparing for submission right through to settlement. Our data actually suggests it works out to be about $186 an hour, which I'm sure you have your own data on this as well. But conversely, you know, running that same calculation on asset finance, which, you know, typically has a much quicker processing time, and running it on a full application for us works out to be $395 an hour. Now, bear in mind, this is after commission splits as well. So I'll get to that in a moment. However, for those looking to, you know, further simplify or get the foot in the door, in terms of a process whereby it's just a tick and flick referral, it can be a whole lot more lucrative from that perspective as well, because it's just going to be a situation of a name and number and straight through to us, and then, you know, or referral hub similar to us. Acknowledging the fact you probably already know if the customer's already going to do some renovations, need a personal loan, new car, sailing, all of those things, you know, travel around Australia. So you've probably well established that. So, and again, this extends to commercial clients, you know, in terms of trucks, earth moving forklifts, and, you know, we spoke about before that business funding piece. So that's what our data suggests. But like, imagine you're at that next barbecue and the question comes around of purchasing a new asset. You know, can they refer the mortgage broker or yourself that can help with their needs, or does it become you know, are you at risk of someone else being referred that does it all in terms of assets? So it becomes not only an acquisition strategy, ultimately, because so many of the referrals, as we know, are word of mouth, but just as importantly, it's a retention strategy to stop leakage, as, you know, it could be the biggest threat in the future. It could just simply be other brokers that do choose to diversify. And not to mention that the increased frequency in which you'll actually get the opportunity to engage your customers, I think, is a really big point as well. And that just further deepens your relationship with them. So in terms of, you know, let's say that you're sold on the idea and look, that all makes sense and you've answered off those questions. I think it's more a question of how then. You know, we've covered that off earlier before. It's that scary piece as well. So rather than, you know, wrapping your head around each lender's compliance, accreditation policies, an excellent way is actually just to go through and easily enable asset finance is actually to align with the referral hub style of solution, because they can do it all for you. Obviously, Notify offers one such solution, but the biggest piece is your customer remains your customer, but you get to take advantage of technology and support while then getting access to a panel of lenders at that point without requiring individual accreditations to start either. I think that's the biggest piece as well. So ultimately you become a one-stop shop whilst not impacting your core business, and then, you know, you future-proof your business while still offering excellent service that you're renowned for. And hey, you know, when the time's right and you feel like jumping in the driver's seat more and more as you go along, it's a great, you know, starting point where you can actually grow the business from an asset finance perspective as well. Look, to close out, basically the summary or the takeaway thoughts are, hopefully, you know, if today, if nothing else, it's got you thinking asset isn't something that should be looked at as a nice to have, but, you know, where time's still a barrier of entry, I think it's starting to think about, you know, ultimately what could the long-term cost of not doing asset finance within your business look like? You know, are you ultimately leaving the door wide open for other brokers to acquire your customers? And look, for those that are starting to dabble or thinking about dabbling in asset finance, I think, you know, aligning with a referral hub is probably the easiest way to access that market for your business, and start to sort of, you know, dabble in it a little bit more and more as we go along. But in terms of, you know, anything we've covered off today, if you want to discuss it a little bit further, certainly reach out to myself. There's some contact details. We've got our website there as well, but throw some questions, comments through to me, and we can take things offline or go through it now as well. And that sort of covers off that piece.
Perfect. I think the biggest takeaway, Alex, is that you don't need to know individual policies of each individual lender, what they can and can't do, because this is the one-stop shop. And if you're time poor, you can just tick and flick, and you can still service the client and the customer.
Exactly right. That's exactly right.
Perfect. Thank you very much, Alex. Thanks for that.
Thank you.
Next on today's agenda, this man definitely needs no introduction. He's the FBAA Managing Director, Mr. Peter White, AM, with an industry update. Over to you, Pete.
Hi there, and thanks very much. Let me try and share my screen here. Let's see if I get this right. I'm pretty sure it's that one. There we go. Is that coming through okay? Yeah.
Perfect.
All righty. Well, thanks again for everybody for joining us today. I really appreciate it, and hope you're all keeping really busy as we once again wait to see what the Reserve Bank of Australia does today. Anyhow, very soon we'll all know. Will it be 50 basis points, or will it be less, or could it be more? That's the question we're all waiting to see answered. But there is one thing for sure, it's going up. But anyhow, before we get to that, let's go through a couple of things here. And if I can get this to work, which would be good. I don't know why it's not moving on me. Let's try that. That'll help. Look at that. I think given where we are in the marketplace at the moment, this is a great little saying that we always need to reflect on, that always remember that your present situation is not your final destination. The best is yet to come. And it certainly is. I've been in the industry now, which is now my 44th year. And I can tell you now, over all those decades, I've seen many things come and go, and markets twist and turn. And right now, with what we're seeing, these are great times. We know that all of our members are telling us how busy they are, and that's not going to slow down for a little while. It's going to continue on to be very busy, and we got to make hay while the sun shines, because markets will turn. As we know, interest rates are going up. We said that a minute ago. Property prices are starting to plateau and come down in certain areas, but these are all opportunities. So it's important that you focus on those opportunities and you keep doing what you do really well, which is why when I'm talking to you today and the things I'm covering, it's really so that you can stay focused on your journey, because it is your journey to travel, and it's important you keep heading towards your goals and not worry about the distractions that are going on around you. And with you guys being focused and ladies being focused on your journey and on what you're doing and acting in the best interest of the client, you are why this industry is in such great shape. We report the data to our regulators and talk to government all on a regular basis, but it's all because of what you do that makes a success of this industry and why we're being able to achieve various things that we're doing at the moment. So please stay focused on what you're doing. Remember to innovate and adapt as things twist and change, and don't doubt where you're going. Be strong and positive, because you're on a really great journey. And the other piece there to remember is doubts will kill more dreams than failure ever will. So it's keep focused on having a go. Some things won't work. That's okay. That's life. We keep going, but keep focused on where you're going, because it's your journey and there's some great things ahead of us. And on that, what I want to do is talk about what's happening in the regulatory environment. I'm not going to go through all this with you. We haven't got a few hours spare to do that today. But part of, from my point of view, is helping you to keep focused on what you're doing, is to have comfort and assurance that we here at the FBAA and myself are looking after all these things for you. Otherwise, these things would either play out really badly, or you'd have to do it. Now, that wouldn't be much fun. So anyhow, Here is a list of things that we've already reviewed and been consulting on in submissions and engagements with government and regulators so far this year in 2022. In actual fact, you've got to remember, as we went into federal election, 6 weeks out from that, everything stops, right? Because we wind up in a caretaker government, nobody can make decisions. And it takes a few weeks to keep things going. So here we are, as we've just kicked into this time of the year, and a few months ago, or a couple of months ago, things slowed down. So this work was done in a bit over the first quarter of this year. There's a lot going on. And these are all important pieces that we're working on. Nothing in here on this list that should concern anybody in any great degree, but there'll be more rollout as things complete. These are all stakeholder engagements. Over and above that, we also had engaged late last year on the Financial Services Royal Commissions on broker remuneration. We did a 161-page submission to government just before Christmas of last year, and we spoke intensely around the clawback and remuneration and the borrower experience, the impacts of COVID, and also affordability of borrowers. These things have all played out to position the FBAA and brokers in a very positive way in what is going to be a challenging period ahead, and it's already what's started. But with that engagement, as far as the review is concerned, it's not happening. Both the LNP, the Liberal Party, said that research and data was significant to their decisions and making their outcomes. Labor said that we've been consulting with the years to get to the point where they made their decision, confirming that neither party was going to undertake the 2022 broker remuneration review as recommended by the Financial Services Royal Commission. So that ain't happening, that's over, and that's something else you don't have to worry about. So these are all part of history. And then, of course, there was this. This was in 8 years in the making from my point of view, in conversations with the man on the left there, the Honourable Jim Chalmers, who's currently now the Federal Treasurer. He wasn't at the time that was taken. And on the right there, a release we did just before the election with the Honourable Stephen Jones. Stephen is now the Federal Financial Services Minister. And what were we doing? Well, we're making history. We're talking about clawbacks, an agreement from Labor Party that we will review and reconsider unfair clawbacks to be reduced to 1 year. That is currently on the table. I have been speaking with the Minister's office over the past few days and later part of last week, and we are coming together to have a chat shortly to map out what that stakeholder engagement looks like, and also to drive that conversation further, because it's not just about clawbacks, although that's a very important part of what the conversation is. So the Minister reached out to me a few weeks ago. I went back to them and we furthered conversations last week and over the last couple of days. And so this conversation is progressing. It's not something that's dormant. It is moving forward, which are great things, because there's that, and there's a few other things that still need to be worked out. So we have pieces within the best interest duty that are not resolved. So bundled credit cards into a home loan should never have been subject to a best interest duty. That's not the way the law was written. That was not the intent of Treasury's advice to ASIC, but of course when ASIC gave their regulatory guidance out on RG 273, they said you've got to apply the best interest duty to all products within a bundle. That's not on. You don't get the details on credit cards to be able to apply a best interest duty, or not in the manner in which the regulator would expect you to. So that's got to be fixed. Some lenders have turned around and said, well, you can opt out of the credit card piece in the home loan if they've normally bundled one and give it to you or give it to the borrower. You can opt out of that. My concern with that is that sometime in the future, somebody's going to have their back against the wall and going to say, a lawyer, an ambulance chasing lawyer is going to say to you, well, yeah, Mr. and Mrs. Broker, what was it that you did to believe that it wasn't in the best interest of a borrower to not have the credit card? And all of a sudden you're in this crazy conversation. So anyhow, we need to get that fixed. We've been on it since the bid started, and we'll continue doing that. The other piece that we're in conversations with ASIC about, but also be talking to the Minister on, is consumer asset loans, where ASIC came out in Christmas of, December of 2022, saying that if you're a mortgage broker and you write a car loan, for the sake of a common term, a consumer asset loan, it is broader than just cars, but you know where I'm at. If you write a car loan, you've got to do the lowest possible rate. The lowest possible rate is one that doesn't have any commission in it. And that's not on. You're not running a charity, you're running a business. That's got to be fixed too. So we're working on those pieces within the best interest duty. We're not letting go of those things until we're flogging a dead horse. It's going nowhere. But for now, it's going somewhere. The other piece we're working on is consumer data rights and open banking, some important parts of where we go as we progress into the next year and beyond. You may have seen information come out for me in the last few days about accountants' letters, and they're only used generally in low-doc loans, and these days pretty much only in business or commercial lending. There's very little, if any at all, happening in the consumer space. But the associations for accountants have written out, said basically not to give accountants letters whereby you're qualifying their ability to service a loan, only if you're validating data that's already been submitted to the tax office or you actually physically can see. So there's some important pieces that are happening in there, because how that plays out is that as we go forward in the future, through open banking, that data is going to be available to all lenders anyhow in regards to that client. So yeah, at this stage, it doesn't look like it's going to have a big impact. It is going to have some. Some lenders will adjust their policies for it. It is a lender problem as much as anything. But I think we'll see some adjustments there, and there'll be a bit of change in the way we do those style of loans, where an accountant's letter might have been a means of validating somebody's financial statements or the like. And we'll see what happens there on that space. It's only new out, so we keep checking on it. The other piece we're working on is the old reference checking protocols versus separation letters. So separation letters is something that we as an industry, not the FBAA mind you, but industry as such, brought out to help maneuver people from one aggregator to another. So the industry designed separation letters. There's no regulation around that. It's not a regulatory document. It's an industry document. The reference checking protocols is a regulatory piece of work. It's been brought out by ASIC, and it's all about getting rid of separation letters and doing the reference checking protocols. And that way, the aim is to get rid of these grey areas where people actually don't give a qualification one way or the other. So they infer things that may or may not be kosher with that particular broker. And the reference checking protocols is to get rid of that. It's governed by law. There's fines and penalties imposed if you don't tell the truth, versus the separation letters that are much more problematic. So we'll look forward to seeing separation letters gone, and we just move into the reference checking protocols as a sole means of reference checking somebody as they swap between aggregators and the like. An important piece of work we're working on right now is the Australian Law Reform Commission. So the Australian Law Reform Commission is whereby it's a government stakeholder engagement where they're looking at bringing all the different pieces of legislation into one. So we're governed obviously by the NCCP. If you're into insurances or into financial planning, you're governed by AFSLs or the Financial Services Reform Act. And also we have governances across the Corporations Act. Now, originally the Corps Act was what was proposed for everything to be governed in. What they're looking at, and that didn't happen as the NCCP and FSRA rolled out. They sort of diverged in their own little worlds. They're now trying to see whether or not they can bring them together. And we have some real concern about that we've already expressed in the initial engagements. What we don't want to do is to see the NCCP become the FSRA, because if you're a financial planner and you fall under the FSRA, you also got hit with FAFR obligations, a freedom of financial advice. And the freedom of financial advice means basically you get no commission. Now, we aren't in that gig, so there's got to be some defined walls of separation and make sure that that doesn't go down that journey. We've already expressed that, together with other things, of course, to the Law Reform Commission. But this is a 2-year, I probably should do that, shouldn't I? A 2-year consultation period. So it's not going to happen quickly. There's a lot of work to be done. Wouldn't surprise me if it went longer than a couple of years. It's only just begun, so it's very early days. It's one where we're going to watch this space very, very carefully to make sure that things work out the right way. So that's what that's about. Now we are, as we're into the new financial year, the new reforms through AFCA have commenced. So there's now 5 free cases that will be given to brokers or into the ACLs. Of any cases that go before AFCA, there are lower fees that have been implemented. And going forward, subject to getting through the House and through government, is credit reps no longer to be members. So it's not there yet, but that's one that will potentially play out in the not too distant future. But the new reforms are in place now, and hopefully that gets a better playing field. They are also looking at ensuring as best they can, and obviously we're going to keep close to AFCA through this, is that matters that are being vexatious as such that, you know, people are just trying it on, they're going to get booted early so they don't go into the system. So we'll see if we can get that one to play out the right way, but AFCA is focused on that as well. So I think it's some interesting days, some positive steps being taken by AFCA as we go forward. And the last piece on the screen there is my little favourite, the unholy trinity. So obviously the conversations we're having with the minister at the moment is around clawbacks, but in addition to clawbacks, it's also conversations on the impacts of net of offset, where there's been a 340% increase in brokers waiting to get paid for around 12 months from net of offset transactions because they didn't draw down the first month. That's not on. There's a whole host of issues I won't bore you with right now, but it goes into the small business ombudsman and the small business minister, changes in law some years ago about how invoicings are meant to be paid. Yet here we have an anomaly out there where people are waiting 12 months to get paid for something that's been utilised. So you know, we're working on that together with bank retention teams that will possibly bring the ACCC into that conversation once I've spoken further to the minister on. I believe that bank retention strategies at the moment are anti-competitive on multiple reasons, and it plays back to the consumer. I know we'd like to think it plays back to us in the industry, but it doesn't. The reality is that it impacts us by way of all the work that gets done, but actually you wind up not getting paid for it because at the last minute we try to refinance, the banks pull the world's best deal out from under the table. It's not available to anybody else or ever been seen before, with big paybacks and cash incentives, with cheapest interest rates that you can find on the planet, where they've had opportunities before and never tabled them. So I have concerns over that basically revolve around, if you're prepared to do it for that one person, what about the other 100,000 borrowers you got on your books? Why aren't they getting an advantage of that? Surely this is anti-competitive. And obviously too, once we follow that line of thought, that plays out back into where we believe it should be sitting, and these sort of strategies should not be engaged. If you're going to do it up front, and then nobody wastes time and energy. Otherwise, you've had your chance, bugger off and go away. All right, let's keep going forward. So that's the unholy trinity. Now the conversation at the moment, and won't be long now, and we'll know what the next interest rate rise is going to look like. But where we're heading, I think we all know where it's heading. Interest rates are heading up. And there's some research that we did not so long ago looking at what happens if interest rates go up and obviously repayments go up by it because of it. And we found that if people's people's repayments go up by $300 a month, at the time it's approximately 1%, this was done late last year, 57% of people said they couldn't afford it. So this is a real problem for borrowers in Australia, but also creates an enormous opportunity for you as brokers in the marketplace to be out there and to assist your borrowers. And I implore all of you, get in touch with your client bases, make sure they're going okay, have a look, do a bit of a health check on their mortgage, have a look and see what's going on. Maybe see there's something you can do to restructure it or better position it, because rates are going up and it's not finished yet. We saw obviously, back early in May, there was when the interest rate started to go. We spoke about that research I just showed you into mainstream media, and we wound up with over 300 media stories. 57% of that was on TV, 35% on radio. It combined reach was 76.8 million people. And the key message was all about go and see your broker for professional guidance. They are the ones you need to be talking about. They are the professionals in the industry. And again, in the last week, we've been talking about it in the previous month, and the media stories keep growing and growing and growing because these are the right conversations. These are the positions that we need to be in to confronting the challenge, because it's been around 11 years, well, a bit over 11 years since we've had interest rates start and go up. And that means that there's many borrowers in the marketplace that have never seen an interest rate rise. They need you more than ever right now to help guide them through this process. And if you're a broker who's been in the industry only a short time and you've never been through an interest rate rise, well then, hey, we've got some content on our YouTube channel where we've been talking about that would help you through that as well. So have a look at that if you happen to fall in that situation. But there's a big opportunity here. The most important thing is keep close to your client. And whilst we finish off that conversation on interest rates, we know at the moment, at the time we recorded this, excuse me, The cash rate was 85 basis points. The target rate's 2.5% by the Reserve Bank. There is actually conversation saying that it could be closer to 2.75, maybe 2.8%. And when we look around the world, not long ago, the interest rate, the European bond market closed down. So for those that were securitizing and hoping to sell bonds into Europe, couldn't. US Federal Reserve rate's currently around 1.75, Canada's around 1.5, and the UK is sitting at around 1.25. And here we are at 0.85. Excuse me. So we can see that everywhere around the world, cost of funds have gone up. And if you apply roughly a 2% cost of fund on top of that for the lenders, then you're very quickly sitting at an interest rate of 4.5%. Now, somewhere between that, hopefully not 6%, but maybe 5.5%, will where our interest rates will land. Excuse me one sec, I've got a bug in my throat. What I should have done was got a glass of water before I started, not out of the bottle. There you go. We'll continue on. But these are sort of interest rates where we're going to land. And we'll probably land at 4.5% by the end of the year. And as we go into next year, somewhere around the 5.5% mark will be a home loan rate. Hopefully it's less than that. And these are just my views, but I dare say we're going to wind up in that style of environment. So again, that's why you've got to stay close to your client and help them out. And whilst all this is going on, we're going to continue to do more research to see what's happening in the market and to also protect your future. We have done a whole lot of research on remuneration for brokers. We are going to be tackling that question once I get through the clawback issue. And so when it comes to remuneration, we will visit that. Let me deal with clawbacks first, and then we'll get into it. We'll continue our regular regulatory and political lobbying that we do all the time, doesn't stop, and obviously continue on with our media commentary. Because all of this supports you, our family, and it's important that we're out there, important that we're keeping the pressure on, and important that we stay keeping close to the market. And we have a whole range of forums and groups that we utilise and speak to. And if you want to be a part of any of these, hey, reach out and let us know, because we've got a whole lot of forums and groups there where we're engaging all the time to ensure that we're on message and we're dealing with those things that keep you awake at night. And of course, with all this, it's not like the work ever stops. And I love this saying, it's not about waiting for the storm to pass, it's learning to dance in the rain. And I can remember when I started with the association, I started the association in 2003, but in 2008, I basically took over running it in the regulatory piece. And we only used to do a couple of submissions regulatory-wise a year. Yeah, it's kind of every month. So that regulatory storm keeps on coming, but it's important. And it's important we keep the pressure on in the media. We keep talking about the things that need to be said, whether they're tough questions or not, to ensure that your voice is heard and the issues as they are of the day are dealt with and not swept under the carpet. Because I mentioned earlier about the unholy trinity, which we're dealing with in the marketplace. We've been talking about clawbacks for having a day. Obviously, we've discussed the bank retention teams. Yes, I'm on record calling them grubby discharge tactics, and the net of offsets that are hurting brokers because you're just not getting paid in time. And of course, the one on the left of the screen there, you can see a very young-looking Peter White with dark hair. Not so much these days, as you can see, but have a look at the date on that. November 2015, we were lobbying about commissions for clawbacks, right? So way back then, and here we are now today in May 2020 with the Honourable Stephen Jones on the same conversation. Some of these things take a long time to actually progress, but we're not letting go of it. It's a part of the job. It doesn't necessarily go as quickly as I'd like or you'd like, but we keep talking to all these guys and girls to ensure that we're doing everything we can to make sure that your voice is heard, and we're talking to all the right people and those that influence these decisions to get the right outcomes for you. Because if we didn't, you'll wind up with very bad outcomes you'd be very unhappy about. So we're going to keep doing all that. We're also going to keep doing and working with the International Federation that that I established back in 2015-16. I chair it with the Global Board of Governors, and we ensure we have this conversation on a global scale, because when the regulators of Australia and also the politicians look at formulating legislation for this country, they actually look overseas first. So if we want to be ahead of the game, we need to know what's going on around the world. And as it stands at 5 o'clock tomorrow, I'll be up having a chat to these people as we do each month. So important piece of work there done through the IMBF. And of course, all of you who are brokers are small business people. There's roughly 19,600 brokers in our industry. That's the actual number, regardless of the level of volume you're at. It's based off ASIC data. We get rid of the duplicates that are sitting in there, and that's where you land. But because of this, you're all small business people. I sit on the advisory board of the Small Business Association of Australia, so I can further look after your interests, not just in the credit space, but in the business space. And that falls into the Ombudsman Small Business Policy Forum that I also sit on. They're all very important pieces of work to ensure that we do everything possible that we can to look after you. And that goes to your mental health as well. It's all about family. It's all about what's important. And it's about your mental health, because we see the data regularly. We know what's happening with men and suicide rates and women in regards to their levels of stress that's going on. But if you didn't know, women are more likely to self-harm. Men are more likely to to take their lives. It's just like that's the data. They're really, really concerning situations that happen in our lives, and we need to be prepared to look after one another with all these things that happen. And we do various things here at the FBAA to do that. We're into Are You OK, International Women's Day, International Men's Day, and a new thing that I'm doing slightly to the side of the FBAA, but with the FBAA's endorsement. Any of you ride motorbikes? Well, you need to reach out. The journey's about to come to you very soon. It's all about staying upright, and it's a part of, I guess, creating a tribe. It's our people who ride bikes, and we're going to talk a lot about mental health and industry stuff as well. But these are all there to support you in what we do and what you do in your journey around mental health, together with this confidential counselling service that we provide through Assure, who are the counsellors that provide this free to FBAA members, their staff and their family. And it's free because the wonderful people at Suncorp sponsor it and pay the bill. We love them for that. But hey, listen, if you're struggling with mental health, I suffer with severe anxiety, so I know what it's like firsthand. Make sure you reach out and have a chat to the counsellors there. No one gets any details except Suncorp. Suncorp gets a tally, a literal tally, say X amount of people have used our services, here's the bill, go pay it. Otherwise, there's no data given out. It's very confidential. But it's there for you to support you, your staff, and your families as FBAA members. So take a note of that number. Feel free to reach out. That's why it's there. And for me, that's pretty much it. Thanks very much, everyone.
Thanks, Pete. Always informative and definitely lots to unpack. And thank you very much for your time and your service to us and the FBAA. It's much appreciated.
My pleasure. Thank you.
Just moving on now, guys. We'll wrap it up a little bit ahead of schedule. So that's great. So just want to advise everyone on the FBAA website, the councillors' details there for the FBAA New South Wales State Council are all listed with their numbers. So if you ever need any information around the FBAA, need support, my number's on there. You can give me a call. Also, state managers are available as well, the FBAA state managers. So that brings us to our official close. We hope you got a lot of information out of today's session. And just remember, there's going to be an email sent out with your CPD points and a short survey. Please take the time to fill out this survey. It is very important so we can design the future education pieces and what you really want to hear about and what you want to really know. We're definitely trying to tailor everything to stuff that you guys want to know. We also want to acknowledge the national sponsors for their time and support. You'll receive an email of theirs as well with all their contact details, but for all the presenters today, feel free to reach out directly to them. Also, just remember that there is another session tomorrow, which will be different in nature. So please register for that as well. It's on the FBAA website. We've also got on the 28th of July a Q&A with Whitey. I'm not sure if you've been on there before, but it's definitely a good conversation to hear Pete talk to a presenter. And then we also have a face-to-face event occurring in Sydney on the 20th of September, and there'll be some more information about that. So keep your eyes out on the event page and the FBAA website, and also the emails that you might get as well. So have a great day, everyone. Thanks for attending. Win the day.